Today is Monday, July 8th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and Edward Iskra are with us to discuss the markets on today's show. But first, let's take a quick look at some of the market indicators. The cryptocurrency index CCI 30 has been largely moving sideways south of the 5,000 point mark. Its gain measures at only 2% so far this month, and it is up by 120% year to date. The 30-day Bitcoin volatility index has remained above the 5% level for a week now. The CoinMarketCap website's 24-hour traded volume indicator has been trending south from the past week's highs of close to $100 billion. It has currently dropped towards the $60 billion territory. The Missouri website's so-called Real 10 volume has slipped below the $2 billion mark. The Bitcoin dominance indicator slipped by 1%, but it is now on a move up towards the 63% zone. The top 5 digital assets are trading in the green today. Bitcoin is up by 5% to approach the $12,000 price level. Ether has jumped by 7.5% to break through the $300 psychological level. XRP has been trading sideways at just slightly less than 40 cents. Litecoin has increased slightly to trade close to the $120 mark. And finally, Bitcoin Cash has moved slightly north of the $400 territory. The Coin 360 heat map shows a mostly green picture as the bullish sentiment is driving the markets today. According to the Token Spread website, the XMO and BitMEX exchanges have the biggest price difference for the Bitcoin dollar pair, and it is 1%. The CEX exchange has the biggest spread, and it's 0.27%. We will now take a quick look at some of the characteristics of the Apollo currency. This is an all-in-one currency offering its users possibilities beyond making secure payments for goods and services. It can also be used to create token shares for corporations, and it can be used to manage decentralized organizations. This ERC20 standard token was created instantly, and it is all-time high of just under 1 cent was hit in September of last year. Currently, it can be purchased for less than 0.2 of a cent. We will now review the cryptocurrency performance of various digital asset classes as grouped by the Missouri website. The infrastructure group posts an increase of 1.5%, and it is green across the table. The media and the entertainment category is just under 1% in the green. The decentralized Mana and Theta tokens are dragging this asset class south. The financial sector is up by one more than 1 cent. The Kimono token is one of the top bearish drivers as it stands at nearly 8% in the red. The currency category is the top performer today with an increase of nearly 2.7%. And lastly, the services section has gained close to 1.4%, and there are both gains and declines. This is, of course, where the 5 major cryptocurrency categories stand so far this Monday. Let's now take a look at the most significant moves among the top 100 digital assets. Afterwards, we will take you to a short break where we will be joined with our crypto experts to discuss more of these latest market moves.
many different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is BloxLive TV.
And we're back with our crypto experts. We have Jason Fernandez, COO and co-founder of AE Token, and Edward Iskra, board member of Bitcoin Gold. Guys, great to have you. How are you doing today?
My pleasure to be here.
Always a pleasure. Now, Edward, we will come to you first. Cryptocurrency markets have been mostly trading sideways during the past week. Bitcoin has, of course, stabilized above the $11,000 level. So what is your take on these calm moves that we are actually seeing recently?
I think it's a healthy thing that we're seeing a little bit of stability at a given price level before shooting up higher and higher. As I've said before on the show, that when Bitcoin rises too quickly, I get more and more fear of a bubble and/or reversal, and those drops, sharp drops downward, can be very painful to a lot of investors. So I think it's a very good thing that we had a couple of stable days. I think it's partly a result of the fact that it's been a long holiday weekend here in the U.S., the 4th of July Independence Day weekend. So there were some traders out of the market from the U.S. side of things, so that reduces the volatility a little bit. But I have no concerns about the failure to move the price. When I look at the volume over the course of the year to date, it's been a steady increase in volume, and there's just the smallest downticks in volume over the past couple of days, past week. So I don't see anything backing off. I see this as a typical part of the slowness of the summer and a holiday weekend, and I have every reason to think that we'll see things resume moving shortly. Now, will they move up? Will they move down? I'm still not sure that we're like dead set to move up in the very short term. In the medium term, I'm sure we're going to be going up. I'm very bullish on Bitcoin. But for the next couple days, will we drop back towards 10? Will we rise towards 13? I wouldn't be making that call. Next month, sure, I'll be happy with next month. So if I were looking to get a position into Bitcoin, I would be buying now on every dip I see.
Okay, fine. So more, so always bullish, and next month I guess you're more positive and more hopeful that the price will actually continue going higher. But as you always do say, this is good. I guess that we don't want that sharp snapback, as you of course have told us. So Jason, we'll come to you. What are your thoughts? Do you also think this is actually quite positive in terms of preventing that bubble and that sharp snapback?
So I don't think it will go to 10K anytime soon. I mean, in the next couple of days at least. It is possible that it could see a rise and then it could crash down to 10K, because we've seen that sort of behavior before. But I don't think it could go to 10K just like that. Unlikely. I think while the volume is down overall compared to recent highs, in fairness, we're still up 5% today, and it's just under 12,000 right now. So that comes after days of lower highs and higher lows, and that sort of indicates that this is sort of a breakout and could signal another climb upwards, especially because we've seen lower highs and higher lows, and then this is sort of a break from that pattern. Also considering that this surge took place within a matter of minutes, so we saw it rise from something like low 11,000s to a high 11,000s. It's like 11,800, something like that right now. Considering that it took place within a matter of a few minutes, it could sort of signal market manipulation by whales. So traders should probably keep on their toes and sort of watch this really carefully. But also keep in mind that when other financial markets are doing well, there's less of an interest in Bitcoin. But should we see some sort of global instability and something that could happen very quickly, we would see a lot of funds probably moving into Bitcoin. And there's also likely to be a lot of interest in Bitcoin going forward sometime around the upcoming holidays. So holidays have thus far proven to be an accelerant to existing bull run. So like when there is a bull run and a holiday happens to coincide downside, it has generally worked pretty well for Bitcoin. So that's sort of what I see coming down the pike in the next few months.
Okay, well, I think that's really interesting that you can actually identify, some drivers, some factors there. Of course, holidays, like you said, and of course, if anything's happening globally, then that's going to have an impact. But of course, as we've mentioned, it is up 5%, so still positive, despite those pullbacks that we did see about a week, two weeks ago now. And trading activity, of course, has slowed down significantly. The Coin Market Cap website's daily trading volume is down by more than 50% from where it was during the end of June, when markets hit fresh highs for the year. So is this one of the reasons why we are seeing less volatility in the markets? Edward, we'll come back to you.
Surely. It's surely the case that when we're seeing less volume, we're going to be seeing less volatility. But that's because we're talking about the crypto space. In theory, if we were seeing more volume of the sort of trade type of volume, where people are doing routine transactions in and out of Bitcoin, that kind of volume would add stability. But in point of fact, that's not the kind of volume we typically see in Bitcoin. Typically, we see people getting into Bitcoin and getting out of Bitcoin, which causes the kind of spikes that we just heard about. We just heard a good technical analysis, including a reference to the fact that the price jumped up by about $500 per Bitcoin in a very short period of time. And like you said, that's a sign that somebody's making a large move. Now, I won't say that it's whales trying to manipulate the market. It's also entirely possible that it's a whale getting into the market, and that will cause a similar bump upwards. And that's a sign that there just isn't as much liquidity in the overall Bitcoin space as we would like to see. If a big buyer wants to get in, or a big whale wants to manipulate, and he drives the price up by buying a bunch of Bitcoin, we shouldn't see the price move all that much if there were real deep liquidity in the pool. So some people say this all the time. I have to reiterate, it's still early days in the life of Bitcoin. The cryptocurrency markets are not as liquid as we would like them to be to really create the kind of system that the whole world is going to rely on.
Of course, and we're often talking about, how the market is still an immature market on this program. But overall, like you said, less volume, less volatility. So, Jason, do you share that thought? Do you think, well, actually, that is the reason why we're seeing less volatile markets at the moment?
Yeah, I mean, that's a good point. There is not a lot of liquidity. If you consider the total, the total value of Bitcoin, it's something like it's still only a portion of even Microsoft's total valuation. So it's smaller than some large companies rather. And so obviously, when there's like semi-large moves, that's going to make a difference to how the price of Bitcoin pans out. But I think price is basically a product of supply and demand, and the fact that Bitcoin remains in the 11K range is because there are enough buyers at that point to match the sellers that are at that price. So when the volume decreases, that means that there isn't a whole lot of buying and selling going on, and that would mean basically that would leave prices mostly stable. And right now, that means that whenever a seller does pop up, there's a buyer that quickly appears in short order to sort of fill that void, and that's what's keeping volatility low. But obviously, we've seen over the past few hours actually it pop up fairly significantly. So it's anybody's guess where it could go next. But like I did mention, that is somewhat of a break from the pattern that we were seeing over the past few days.
Okay, so really just coming back to those simple ideas there of supply and demand.
If I can add one more thing?
Absolutely, please do, Edward.
Yeah, Jason mentioned earlier that, what was it? Sorry. I do remember Jason mentioning that part of the, I'm sorry, I lost the train of thought, but what I was going to add was that the current market situation, he talks a lot about the technical analysis and the historical factors, which are all valid. But I'm actually expecting that we're sort of in a bit of a news blight as far as the general crypto space. We haven't had any major newsmakers, either negative or positive. And I suspect that's what's going to break us out of the current sort of flat price situation. There are lots of regulators who are in the process of reviewing things, including new concepts like Litecoin in next week. week we're going to be hearing about that. There are regulators deciding whether or not to approve ETFs. The thing Jason was talking about was that the crypto markets tend to get less interest when things are going positively for the traditional markets. Well, the traditional markets look like they might be coming into something of a tumultuous week, including things like Deutsche Bank's problems. Deutsche Bank is going to be dominating the news, and that's negative for the traditional banking sector, and that's the kind of thing that tends to drive interest in the crypto sector. So we might be seeing news begin to drive the activity in crypto prices this week.
Okay, well then that's quite positive, I guess, for the cryptocurrency space, for the market. So Edward, we're going to come back to you because despite this slowdown on the markets, Bitcoin's hash rate has actually continued printing fresh all-time highs. According to blockchain.com's website, it jumped to more than 74.5 million tera hashes per second last week. So it is up by approximately 100% from a year ago. So what exactly does this mean for Bitcoin and for its price?
What this means for Bitcoin is that the security and safety of the blockchain is pretty much assured. Hash rate actually dropped for the first time in a long time this past December, which was at the end of the long crypto winter, followed by a sharp drop when the cash wars in early winter began. And at that time, there were some miners taking their miners out of production because the revenues they were getting in terms of Bitcoin were too low relative to the amount they would have to spend on the electricity to do the mining. And that was strictly a function of the fact that Bitcoin price had fallen so low. Now, since then, price has begun to recover. Remember, price went down, well below $3,500. At that level, a lot of miners were not profitable. But since then, we've broken through $5,000, $7,000, $9,000, $11,000 per Bitcoin. All those miners are now profitable to run again, so they've come back online. And at the same time, there are manufacturers of miners who have been producing and selling miners. There are long lead times, but these things do get produced and shipped and deployed, and they've been being continuously deployed. A lot of miners were convinced that the dip in Bitcoin price was a short-term thing, and they were investing long-term. They were investing their capital in the infrastructure to continue mining, to be able to take advantage when the price goes up. We're just seeing those miners all get deployed. They've been ordered months ago. They were manufactured weeks ago. They're up and running now. That's why we see the hash rate going up and up and up. Now, it doesn't drive the price directly. Really, it's driven by the price. But the fact that the mining goes up and up does tell us that the security is there that will keep the blockchain safe and keep the blockchain functioning.
Okay, so really just quite positive there because, as you said, it shows that security is there. So the blockchain is, of course, safe. But interesting that it doesn't actually drive the price. So Jason will
But it shows their bullish sentiment as well.
It does indeed, of course. So Jason, we'll come back to you. What are your thoughts for us here? Do you also think, this does show, as Edward said, the bullish sentiment?
Yeah, I mean, it just really means that Bitcoin mining is more competitive than before, perhaps more competitive than ever. The hash rate is basically the speed at which, new blocks are able to be, solved. And Bitcoin is designed to adjust its mining difficulty, something like every, 2016 blocks, every 14 days. And based on the amount of computing power deployed on the network, it sort of figures out how difficult it's supposed to be. And sort of that ensures a block production interval at the next period remains constant at about every 10 minutes. And that's sort of how it's been working thus far. And when there are fewer machines racing to solve the map problem to earn the next payout for the next newly minted Bitcoin, you have difficulty falling. And when there are more computers in the game, difficulty rises. And clearly, a higher hash rate does, bode well for security. But also, like Edward pointed out, it is also a function of price. And when the price goes up, there's, obviously more people that are going to be motivated to start solving, Bitcoin.
So with all of that in mind, Jason, we're going to stick with you for the minute. Are there any estimates of what a healthy increase in hash rate over time is, and where do you expect it to head within the next year and even the next 10 years?
So basically, the hash rate is, like I said, somewhat of a product of price. So it'll get harder or easier to mine Bitcoin based on the demand. Although overall it'll get harder over time to mine Bitcoin for sure. But there isn't quite a healthy increase in hash rate that is separate from the price, because you have essentially the price that's motivating people to go back and start mining or not to mine, depending on whether it becomes becomes unprofitable, as Edward said. So there's sort of it comes down to pretty much the cost of Bitcoin in general, and as the price of Bitcoin gets more and more valuable over time, the hash rate will obviously likely increase, probably in a linear fashion.
Okay, so the correlation is definitely there. Edward, let's hear your thoughts for us, please.
I'd actually go a little bit deeper than that. If Bitcoin price were to stay the same, it won't, but let's say Bitcoin price did stay completely the same, I would still expect hash rate to go up over time for two reasons. Firstly, there's always a delayed effect. Hash rate doesn't respond as quickly as the price does. So since we saw price go up dramatically over the course of the last 6 months, it'll take time for hash rate to come back online, because it's not just a matter of people who turned off their miners turning them back on. There's a lot of people who bought new miners because the price was going up. That investment in new infrastructure takes time to come in, takes time to allocate space to it, takes time to wire it up and deploy it. So there's a sort of lag time. When price goes up, a bunch of people get more equipment or faster equipment, and then over time, over months, we'll see that equipment all come online and bring up that hash rate as the difficulty goes up to compensate. The other reason is the technology is always changing. These ASIC miners for Bitcoin are at their core, computer chips, and the technology for computer chips is always increasing. Smaller sizes, bigger dies, more processing in a unit, more processing per unit of power being used. So the makers of ASIC miners are competing, and there is one dominant maker, but the others are forcing them to compete. So they're constantly coming up with new iterations which are more powerful in terms of overall computation, but also are doing it more efficiently in terms of watts per hash that they create, or hash per watt. So that also drives the hash rate up over time. So as I was saying, if Bitcoin price stayed exactly the same, and if everyone had deployed all the miners they have, I would still expect hash rate to go up over the next year, perhaps doubling over the course of the next 18 months or so, simply because of the advance of technology, where newer miners, which are more efficient and create more hash rate per watt, will replace old miners, and that makes those people who bought those miners more competitive. They capture more of the share, and that drives the difficulty up, which makes the older miners, the ones that aren't as efficient, when that difficulty goes up, they can't run their machines anymore because they become less and less profitable. Eventually, those profitabilities drop below the cost of power. They have to turn off those old miners until and if Bitcoin shoots upwards and they could turn them on for a little while to be profitable. So there's two games going on. Miners are always looking at the price and the cost of their power, but they're also looking at the efficiency of their machines, what new machines are on the time horizon, who's able to order them, who's able to deploy them quickly. Mining is definitely a very competitive race.
And I think it's interesting, because you said hash rate actually isn't waiting for the Bitcoin price to go up. Like you said, there is that delay, and I think that's definitely worth noting, especially with the technological advances. So very interesting there. Now, just slightly moving on, we'll come back to you, Jason. The first half of this year is over, essentially. So if we take a look at the performance of the top 10 digital assets, there is a mixed performance picture. XRP was the worst performer, gaining just over 10%. The Binance Coin shows the top increase, as it is up by more than 400%. Litecoin follows with a 300% surge, and Bitcoin then follows with a jump of closer to 100%. So Jason, what is your take on these moves for the first half of the year?
Yeah, so I think it's expected. There's been a lot of questions about XRP lately, especially since it's competing in a really tight space. There are other companies like Stellar XLM that's nipping at its heels, and pretty much everybody is working on the whole problem of cross-border payments, including Dash, for example. But and also it hasn't really been marketed as a token that's set to rise over time, and so that's also hurt its prospects going forward. Binance Coin has been on a tear for a while. And that's because Binance regularly does a very predictable token burn, and by offering sort of discounts on trading fees, etc., for those who use Binance, they encourage people to hold a large amount of Binance tokens in their Binance accounts. And the tokenomics of Binance has been what's made it so successful lately. That, coupled with sort of the behavior of CZ as sort of an ambassador for the industry, and also the behavior of Binance post hack, and essentially how they handle that sort of probably gave them more customers in terms of people feeling more and more comfortable about using Binance. and knowing that Binance will take responsibility if something goes wrong. At least in this case, they did. So that's sort of been one of the main drivers of Binance, apart from the tokenomics. But Litecoin has also been enormously successful this year. That's in part due to their focus on privacy and security, but mostly due to the fact that Litecoin halving is due in a few months, I think in August. So I wouldn't be surprised to see it drop right post August sometime, so right after the halving. I wouldn't be surprised to see it drop because people may not be as happy with sort of the price once it halves. Like, it may not quite fulfill the expectations. So I think a lot of people will probably sell. So Bitcoin is also doing really well for a variety of reasons. Again, we spoke earlier about market volatility, not just market volatility in the crypto field, but just in general in the financial markets. And as Edward said, sort of these world-changing events can happen really quickly, and those things, have sort of helped Bitcoin. For example, the protests in Hong Kong, the problems with China, the U.S. problems with China. So those sort of things, and of course the halving too, because Bitcoin is also expected to halve. So that's probably a factor as well. So it's sort of very expected that we'd see this sort of distribution between the sort of best and worst performing coins.
So I think it's really interesting actually to note, because most of the things you said is really just looking at what's happened globally and how that's really just sort of impacted the market. So Edward, I see you nodding there. So give us your thoughts. What are your thoughts on the first half of this year?
Jason gave us a lot of great information, so I'll just try to layer a little bit on top of that. So some of the coins that have done well, like Bitcoin and Litecoin and Ethereum, they're established as good stores of value, and that's something I think is a trend here. We've seen the store of value coins going up, while things like XRP, Ripple, have not really moved so much, and Ripple hasn't really sold itself as a store of value. Now, in contrast to Ripple, we've seen Binance Coin do very well, which is also, it's not billing itself as a store of value, it's more of an investment, and I think that's part of why Binance Coin did well. Everybody is looking at it as sort of their way of being part of the Binance ecosystem, having a part of the Binance pie, and it's, of course, it's a major part of the new Binance DEX. People are looking at that as the interesting new thing, the next technology that's coming out, while XRP, that's a coin that's based on what's now a bit of an older technology. And I know that's going to get me some XRP hate, but that's honestly the way I see it. The other thing that's interesting in terms of the global impact on the crypto space, the hot news a couple, is it weeks ago or just days ago, was Litecoin, the new Facebook play. It's interesting to look at what kind of product Libra is going to be in terms of high transaction speed and smart contracts for a large user base. And I think they're going to potentially be a competitor for projects like EOS and Tron. EOS and Tron are offering similar high throughput rates, similar centralized systems, because they're more centralized than something like Ethereum would be. But at the same time, they don't have anywhere near the built-in user base that Facebook does. And if Facebook is driving their users to Libra for those purposes, I think EOS and Tron might be having a fair amount of competition, but that probably won't impact on the coins which are more of a store of value, like Bitcoin and Litecoin. Bitcoin and Litecoin might actually benefit because of more people coming into the crypto space. So, Libra could help some coins and harm other coins. But again, it's just a case of, what's going on in the broader financial markets, in the broader global view, and how that's going to impact what's going on in the crypto space.
So just a mixture of things there, as you said, how the currencies have marketed themselves, of course looking at what's gone on in the news globally in general, and of course looking at something whether it is a store of value or not. So we're now going to look ahead and we're going to come back to you, Jason, because I want to know, where do you see the top 10 digital assets head during the second half of this year? Which ones do you expect to post the most significant gains, and which ones do you think will actually underperform?
So, Binance has proved a pretty good bet thus far overall. They also recently, I think end May, early June, they announced margin trading on certain test accounts. So it's not public yet, but it'll probably be open to the general, probably filter down to the general public soon. and will then probably have a positive effect on Binance on the price. We spoke about XRP a few minutes ago. I think Libra's gain is XRP's loss to some extent, because I think a lot of people do see sort of Libra as being a possible competitor to XRP, because essentially XRP is about cross-border payments, and that's something that Facebook Libra is seeming to also tackle. So that has, I think, not quite worked out for XRP really well. But keep in mind that they have made some 10% of gains. But another cryptocurrency to look at would be Stellar. So since the turn of the year, Stellar is the only major cryptocurrency to have not increased in price. And also keep in mind that a lot of the coins around Stellar, so Stellar is ranked number 12. So a lot of the coins around it have sort of recorded anywhere between 100 to anywhere to 1100% in growth during the same period. And Stellar has just performed much worse than all of these. Stellar, like XRP and Waves, both had excellent ends in 2018. They had really strong 2018s. Waves in particular were more than quadrupled in November, December. But now we see sort of Stellar, XRP, and Waves have stagnated in 2019. And I think it's because sort of the cryptocurrency market is trying to find some sort of equilibrium. I think since January, XRP has gained just 8%. While in the same period, Waves has lost something like 40%. Also, the kind of people that would likely buy Stellar have already probably purchased some. And despite the fact that XLM coins, so Stellar coins, dropped to a price of $0.07 in December, 7 cents basically, nobody really came in to scoop up those sort of bargain basement prices, which is what you would expect if it was a cryptocurrency that was extremely hot. Now that might be a sign of sort of a Stellar paying the cost for previous success, because of a lot of crypto assets lost close to 99% of their value. XLM only dropped something like 92%. So I think some buyers are probably anticipating like future losses. But since XRP hasn't quite knocked it out of the park and they've sort of been struggling, XLM does have a shot at sort of showing faster gains than XRP, but they really have to step it up on releasing more positive news that will sort of push the price higher.
Okay, so lots mentioned there. You spoke about the positivity of Binance, and of course, very interesting looking at Libra and XRP and saying, well, actually, they could be a bit of a competitor when it comes to cross-border payments. So we're going to come back to you, Edward. What are your thoughts on the second half of this year?
There's a lot of good stuff there that Jason said. I'll tack on just a few things. I agree with him about XRP maybe not having a lot of upside. To reemphasize something he said earlier about Litecoin, Litecoin has its halving coming up just next month, and it's probably got the halving bump priced in, or will shortly before the halving happens, which means a dip after the halving. I think if Litecoin gets back to its July, August high by the end of the year, it will be doing well. There's a possibility that it'll be sort of a drag on things in the months after August, September, October. It might take a while to come back from that pullout as people stop getting ready to play the halving, but I think that's just sort of market psychology at play. I'm still bullish on the coin overall. I also wanted to add that I think between Bitcoin Cash and Bitcoin SV, I can't see them both going up in value. I think it's more likely that one or the other will dominate that sort of, the Bitcoin Cash side of things, the big block side of the Bitcoin debate. So I think one of them is going to probably come down. It's possible to get closer together, but I'd have to say I think more likely is that SV is going to come down and the Bitcoin Cash will stick around as the big block alternative. And one weird thing to mention, of course, very few people are trading Tether, and certainly nobody's investing in it as a long-term play because it's a stable coin. But it is a top 10 coin in terms of market cap, and I'd like to note that I think it's going to come down out of the top 10. I think Tether's market share overall and Tether's market share within the stablecoin space is going to come down because there are so many other stablecoin alternatives. Many different exchanges, many different entities are putting out stablecoins, synthetic stablecoins, dollar-backed stablecoins. I think they're going to get more and more traction, which means probably less market share for Tether. I think we'll see it come out of the top 10 in terms of total capitalization.
Okay, Edward, thank you. And just finally, we are pushed for time, so if you could be brief, that would be excellent. Travel by Bit Better version has actually launched live. So this website allows users to book flights and hotels by using Bitcoin, Litecoin, or Binance Coin. So do you see a new service like this one with cryptocurrency payments as a challenger for the existing companies that actually provide similar services, or is this more likely to serve as a signal for them to implement crypto payments as well? Jason, we'll come back to you.
So just to tack on to something that everyone was just saying about Bitcoin SV, I think Bitcoin SV is going to have a lot of problems once the whole Craig Wright situation plays out, and I think that's going to play out in the next 6 months. He's already had a really hard time proving that he's the Bitcoin creator, Satoshi, and I think once that plays out, I think you can probably see the floor fall out of Bitcoin SV. So that's one thing to point out. Just wanted to tack that on. And as far as your secondary question is with the whole travel by bit question, I really don't think these business models are going to survive. I think actually they're about a year too late. The whole idea of being able to use crypto to make purchases isn't now limited to like websites that accept it. You can use crypto via a credit card, for example, and that's an increasing use case that's happening. There's also a lot of websites and services that are directly integrating crypto. So the whole, if your only differentiation is, oh, we accept crypto to buy various different products, I don't think that's a. I think that's a business model that's about 1 year too late.
And Edward, just very briefly for us, because we are
really
pushed for time.
briefly. So I think they're a little too late because this is something where it's easy to step in. I'm sure it'll drive some interest in the crypto space because of their offering travel services, but traditional travel services, they don't have onerous laws like KYC laws that they have to comply with, so they're not going to lose a lot of business to a competitor just because they offer crypto. Offering crypto is something that's super easy to do. It's easier than ever to add a couple of widgets that will let people pay with cryptocurrency. So the traditional travel services can very, very easily move in on this market if it proves to be receptive to the crypto community.
So very exciting stuff right there. So Edward, Jason, as always, it's an absolute pleasure. Thank you so much for coming on the program with us today.
Thanks all.
Thanks.
Now, before we sign off, I do have a last-minute update from my editorial staff regarding the crypto market. The price of Bitcoin has continued trending up towards the 12K mark as a majority of the digital assets trade in the green. Trading activity has increased slightly. The CoinMarketCap website's 24-hour traded volume indicator is approaching the $70 billion zone. The bullish performance continues for the XMAX token, which is now one of the top 100 digital assets. Well, that is all for this Monday's Crypto Now live show. We thank Jason and Edward for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.